What up, guys? Welcome to the first episode of HyperChange's podcast. I'm going to record this every week where I pick maybe 5 or 10 tech articles that I think are the most interesting or pertinent to the topics we're covering at HyperChange. And then I'm going to pick one startup and we're going to go over it, explain it, just kind of a daily or a weekly dose of tech. Just put out a report this morning about Apple's new ambitions to get into augmented reality. And interestingly enough, they boil down the ambitions in terms of hardware to some sort of glasses that will be paired with the iPhone. Very similar to Google Glass or Snapchat Spectacles kind of product, where software is built into the glasses and you can actually see the world and augment the world with these glasses. So I guess a kind of example to put that in perspective would be something like Yelp. So you're walking down the street, you look at a restaurant through the glasses, and all of a sudden their Yelp rating pops up right next to them and you can start reading reviews while you're looking at the restaurant. So not really as disruptive as you think, but just makes looking at Yelp a little bit easier. Bloomberg goes on to say in their report that Apple's been acquiring a significant amount of companies with the expertise to put out an augmented reality product. They're thinking like things like 3D video production, wearable hardware. They hired a guy called Cody White, former lead engineer of Amazon's Lumberyard virtual reality platform. Duncan McRoberts, Meta's former director of software and development. Yuri Petrov, a former Oculus researcher. And Avi Bar-Zeev, who worked on the HoloLens and Google Earth. So these are just a couple of the people that Apple's recruiting to build out their augmented reality solution. In addition to hiring key thought leaders in the augmented reality space, Apple's additionally making acquisitions and acquiring smaller companies that are specialized in different niches within the augmented reality world. So they acquired a company called Metio, or Metaio, don't know if I'm saying that right, in 2015. They develop augmented reality software. So they think that the first kind of way augmented reality is going to make its way into Apple's products is just going to be through the iPhone. Apparently, there's already a good chunk of engineers that are working on the iPhone's camera to implement AR-related features. One of the features that Apple is testing out is you can take a picture and then change the depth of the picture to kind of zoom in and focus on different objects, and then tilt it around and move the camera. I don't know how special this is, but I guess they're claiming it's more like the way Snapchat's camera works. I guess it looks like they're just kind of copying Snapchat with this. I'm not really too impressed. But once again, this is kind of like a lot of other Apple rumors where it's like, oh, Apple's going to implement virtual reality, augmented reality, but we don't really get a concrete way of how this is actually going to see its way into the product line and make a meaningful difference in the company in terms of the consumer's experience with their products or shareholders' experience with increased profitability. If they release glasses, sure, that would be a really cool new product and like a critical expansion of the Apple ecosystem. But is that something that's going to actually move the needle for the company? Probably not. And it seems like they're just kind of copying Snapchat and Google Glass. I don't think there's anything here right now. Frankly, this AR report, I was like excited to check it out, but then when I actually read it from Bloomberg, I'll link to it so you guys can read it for yourselves. I was not that impressed. So after all this, Bloomberg is basically saying that Apple may or may not implement some to-be-determined augmented reality feature in the iPhone 8 camera. Probably not, because Apple always ends up pushing every cool feature back a year or two. And then even further down the road, we may see some augmented reality glasses from Apple. But like every further down the road product, Apple's car, Apple's this, Apple's that, it's probably never going to get released. And if it does, not for years. So it's definitely not going to move the needle in the near term. So in short, way too much hype for Apple and augmented reality. The company is still as boring as ever. Remember, Warren Buffett just invested in it. This is not the Apple of the early 2000s and the late 90s that Steve Jobs is running. This Apple is a lot more like IBM. I don't know. So Apple's boring. They're a blue chip, slowly becoming tech dinosaur. This augmented reality report is just a bunch of fluff. Nothing really in there. Even the reports on Apple's innovation seem to be proving that they're not innovative. Number 2, so more about Apple. Alexa is now in the iPhone. So this is kind of a big step, and we actually did our Moonshot Monday a week ago that was covering the fact that Alexa is becoming the new platform for which we interact with technology. And this is based on the precedent that Amazon is thinking of, which is voice will be the primary way in which we interact with our digital devices, not touch. And if you think about this, this is a really scary proposition for not only Apple because it will translate into reduced iPhone usage, because you won't need to tap apps. You'll be able to use apps through Alexa. But additionally, Google's probably freaking out because they won't be able to show ads on their desktop search, and a lot of these search queries are now going to go through Alexa. So of course, Google has their own AI and Apple has Siri. So I thought it's very interesting that last week Apple decided to let Siri come into its iPhones through the Amazon app. So now it's definitely not as convenient as Siri or something that's as pervasive as Siri, but they are allowing Alexa on the iPhone within iOS. Now you do have to open the Amazon app and touch a button to activate Alexa, so it's a lot harder and a lot more friction than just opening Siri. But this is an interesting kind of changing of the guard moment where Apple is slowly opening up its ecosystem to the leading AI company, Amazon. I don't know if that's admitting that Siri's going to lose or they're just trying to be open and they don't want to close off Alexa. But definitely a new era in the AI battles now that Alexa has entered the iPhone. So this is going to be something to watch closely. And not only can she order stuff for you within the Amazon app, but all of Alexa's functionality, including, you know, your home kit and controlling your home, etc., is built into the Alexa through Amazon app. So now Amazon is, even though it's only in the Amazon app where you normally buy stuff, Alexa is inching through that medium into the smart home, even through iOS, even though Apple has their own smart home kind of Siri hub with iOS. So interesting to see that Apple's actually letting Alexa come into their platform. I didn't think this was going to happen, and definitely not this early. But something to watch very closely going forward as the AI wars continue to heat up. Piece of news number 3 for the week: Uber is crumbling, continually crumbling ever since, Uber has just been wrought with scandals throughout this entire year, and I feel like it keeps getting worse. Every single day we get like a new worse piece of news. Today, the president, Jeff Jones, is quitting after less than a year, after multiple, controversies that we've seen in recent weeks. They had allegations of sexual harassment, a bunch of complaints about the overall work culture, and then that YouTube video that leaked of the CEO being very rude to an Uber driver. This created the whole hashtag delete Uber. People are, there's a huge backlash against the app. I guess everybody's downloading Lyft. So this is definitely not good. And it, not just because it signals there's weakness at the company of Uber and turmoil within them, but Uber is valued so high, arguably priced for perfection. The last time they raised money, they were valued at nearly $70 billion. For Uber to grow into its $70 billion valuation, they need to continue executing at an incredible pace, growing their business phenomenally. They cannot afford to slip up consistently and have users just going to Lyft because they're fed up with Uber's PR. The worst thing about all this is that it's really preventable. Like, all these things, all these problems that Uber have aren't actually really related to their business itself. They're related to company culture and company policy and the way they're handling issues when they come up. I think it's very concerning to see this repeated trend of slip-ups at the company, because I think it signals a much deeper problem at Uber, and their valuation is so high. Lyft is coming for their throat. Tesla's coming for their throat. I don't think Uber has a way out of this. Frankly, if I was anything to do with Uber, I would be taking my chips off the table if I had any way to do so. I think Uber is going to be the poster unicorn or busted unicorn child of this era. There's just no way they're going to be able to grow into a $70 billion valuation. I think that's already like an incredible task without these massive issues coming up and all this turmoil at the executive level. So now when you throw into the mix that there's mega turmoil at the executive level and now this consumer backlash of where there's literally a hashtag delete Uber, and people are actively using the competition just because they don't like the company, I think they're in serious trouble. I think we're going to need to see the company's probably trying to desperately raise capital as they're burning more and more because people are using the app less and less. But they still need to put, solid revenue growth up to please their investors. So Uber is just, they're inching towards the startup death spiral, and that's not good at all. I am very skeptical of Uber's $70 billion valuation after this recent turmoil. And now that the president has stepped down, that is just, there's no way that's a good sign. I'm sorry. He was only there for 6 months and he stepped down. And yeah, I mean, the same article that I'm going to link to has apparently a couple other departures have been happening as well. Actually we have a executive exodus, if you will, occurring at Uber right now at the time when the company probably most needs their smartest people. So yeah, Uber crumbling. Snap. I just published an article this morning called Snapchat is worth $50 billion in 2020 with 300 million daily active users. This is on Seeking Alpha. I'll link to it. So I kind of want to talk about the Snap IPO. Now that the hype settled down, we're at 19 a share, maybe 20. People have kind of starting to look at the company rationally. I think this is the time where the IPO hype has died down. So if you want to enter the stock because you're bullish and you believe in the story, I think it makes a lot of sense. And so that's why I wanted to write my article, kind of extrapolating what the future of Snap could look like in a successful scenario and an unsuccessful scenario. So let's start with the successful scenario. I think Snapchat has incredible potential. A lot of people don't understand it, I think, frankly, because their demographic is so young and the people smart enough to do the accurate financial analysis are so old that there's just a disconnect and people, frankly, don't understand the company. They're growing revenue 6x. They're about to more than double revenue this year. Just an incredible growth rate. Investing in Snap is sort of like being a venture capitalist because the company is so young and we've yet to see its business model fully evolve. That if you're making a bet on Snap, you're making a bet on what the business model will look like in 5 years, not what the business model looks like today. So that's why I don't really care that they're unprofitable today, and I don't think long should care either, because you're betting on a growth story, and therefore you want them to be unprofitable and you want them to be expanding and seizing every opportunity they have. And so I wanted to get granular with that and say, okay, how does Snapchat become worth $50 billion? How do we see upside from this $19 or $20 share price? What has to happen for them to see that value and show shareholders that are investing today significant upside? Well, in the next 3 years, I think they need to hit 300 million daily active users to be worth $50 billion. That would put the share price at about $40 per share, a double from today in 3 years, offering investors a very good return. So I think that's kind of a benchmark of like Snapchat makes a lot of sense. And I think buying the stock at 19 per share is a rational investment if you believe that they will be able to hit 300 million daily active users. Snapchat is currently at 158 million daily active users, and that number is growing between 40 and 50% per year. So they're definitely on track to hit that 300 million user by 2020 mark if they don't slow down dramatically, which some people think is happening due to Instagram copying their features and stealing users and functionality and engagement. But this is all up in the air because we've yet to even see Snap's Q1 report, which is going to give us an incredible amount more insight into the Instagram Snap wars. Not just engagement and user base, but whether Instagram's even been able to steal ad dollars from Snapchat. So there's just so much up in the air. Frankly, this is like an incredibly binary stock. That's why I personally don't own it, because I think there's tremendous upside there, and I could see them doubling their user base to 300 million. So let's take a step back and figure out why they, with 300 million daily active users, would be actually worth 50 billion. And this is kind of extrapolating the same engagement and ad revenue that Facebook has been able to achieve with similar time on the app that Snapchat has. So Snapchat's users are spending between 25 and 30 minutes on the app, which is a lot, and actually very similar to the average time that Facebook's users are spending on the app. So based on that assumption, I'm predicting that Snapchat will be able to get an average revenue per user similar to what Facebook has now. So Facebook, if you annualize their Q4 revenue per user, is about $28 per daily active user in revenue per year. Snapchat is only at $4.20 as of Q4. So they're monetizing their users at only about 20% of the rate as Facebook. And that's not a problem. That's actually a good thing. They're showing them less ads. And it's not even a good or bad thing. It just means that Snapchat is a lot earlier in their growth and monetization phase. They haven't pulled that ad lever or pushed that ad lever fully. So that's why we're still seeing incredibly quickly ramping revenue per user. In fact, in Q4, their revenue per daily active user was up like 200% from 31 cents to $1.05 in the quarter. So, almost tripling. Their monetization is increasing incredibly fast. Their user growth is growing very quickly, although some people think that's going to slow down because of Instagram. So we've got an incredible growth story on our hands. The other key assumption with my 300 million daily active users is that they can bring up their annual revenue per daily active user to $20 from the current $4.20. Now, that is still significantly below the $28 plus that Facebook is making per daily active user right now. That's why I think it's a fairly reasonable estimate. And over the next 3 years, Snapchat will still be able to ramp monetization and get to close to the level that Facebook is today. Now, in that scenario, with $20 in revenue per user, per daily active user, and 300 million daily active users, we have $6 billion in revenue. At a $50 billion valuation with $6 billion in revenue, Snapchat is trading at about an 8.3 price sales multiple. This is almost exactly where Facebook trades today, and I think a pretty reasonable price sales multiple given how profitable these social media businesses become when they're fully mature, and given the growth rate that Snapchat will have in 2020. So now let's talk about profits. Facebook reached an incredible inflection point after about 5 or 600 million in revenue, where they went from all of a sudden losing bucket loads of money to printing profits. I think the same thing is going to happen to Snapchat, but instead of that inflection point being at 6 or 700 million, it's going to be at 1 or 1.5 billion. Why? Because Snapchat is all about video, and cloud-based video requires incredible amounts of hosting infrastructure. That's why they've already committed to spending $2 billion with Google's cloud over the next 5 years and $1 billion with Apple or with Amazon's cloud over the next 5 years, because they know they're trying to lock up these strategic partnerships. This is the foundation of the technology of Snapchat's business. They need mega cloud computing infrastructure to be able to support all the data that their users are doing when they're sending and consuming snaps. You know, if you think about it, Snapchat is really about video. Facebook was really about text and pictures when it was blowing up. And so that's why I think you have to look at the cost structure of Snap as being a little bit higher. But that core underlying principle of an inflection point and significant profitability after a certain mass of users is still similar. So instead of Snap's inflection point being, you know, $500 million to 750 million, it'll be 1 to 1.5 billion because the costs are still there. But after we hit that 1 to 1.5 billion in revenue, I think the business is going to get incredibly profitable. Gross margins are going to be, you know, significantly above 50%, and the business is going to warrant that very high price sales multiple that it's already carrying. That's kind of my back of the napkin math of the upside of Snap. Now let's see the downside. Snapchat only added 5 million new users in Q4. That was the lowest amount of new users they added in a quarter for like 2 years. Should have people freaked out because it's right when Instagram launched its feature. So that could be the start of the evidence that Instagram is already beating Snap at its own game. But I think we need to wait until Q1 to really see the rest of the numbers and fully make that analysis. If Instagram can copy Snapchat and Snapchat's user growth is really slowing and in fact maybe stopping, and they can't hit 300 million daily active users, the company is significantly overvalued at 19 per share and will have massive issues. It's going to end up exactly like Twitter if they cannot keep growing users. And you know, it's just all about reaching that inflection point of profitability. If they can't keep growing users and are still losing money, and that start after showing more and more ads, even though user engagement is declining and the only way to make up that revenue growth is increase ad load, then they're going to get into even more trouble because users are going to leave even faster because they're showing more ads, and it becomes a negative death spiral. So the two scenarios I see playing out for Snap are this mega case upside where Facebook can never really copy them. They are a tidal wave of dominance with the younger, below millennial generation, and every baby that's born from now for the next 10 years grows up and uses Snapchat, and they're worth 50 billion in 2020, 100 billion in 2023. You know, the company has huge potential in that scenario. However, the other outcome is Facebook and Instagram copy their features to death. Slowly and slowly, the engagement that was happening on Snap moves to Facebook, and the company is worth a goose egg zero. So this binary outcome is why I don't own shares. And I think we're way too early in the unfolding of the business model to make a rational prediction about which way this could go. So that's why I'm out of Snap, but it's a fascinating company to follow. Frankly, I'm stoked that they went public so we can watch this unfold while reading their financials. I wish we could do that with Uber right now, but we can't. So going to be a hell of a lot of fun to just watch Snap either crumble or dominate. We're going to be covering it all on HyperChange. This is definitely a HyperChange company. So yeah, Snap is interesting. Check out my Seek and Alpha article. Quick note on a potential mega breakthrough in battery technology. So QZ.com, one of my favorite news sites, I will link to the article, reported that John Goodenough, I think that's his name, he's 94, the father of the lithium-ion battery. Yes, the technology that Tesla uses today, came up with a novel solution, a blockbuster advance in battery technology that allows for electric vehicles to go 10 times as much as current charging technology does. Apparently, this battery breakthrough is legit enough that Eric Schmidt, the Google chairman, tweeted about it, so that gives it some cred. Goodenough has also had an incredible amount of battery breakthroughs in his career. He's regarded as one of the leading scientists in the field. So even though the paper's been met with a lot of skepticism by industry leaders and other experts, it's actually, like, people are trusting it because the guy who put it out has done so much incredible things before, and he's proven everybody wrong before, so that's why nobody's fully discounting this. And the reason why this is different than a lot of other battery breakthroughs you read is because it doesn't require incredibly expensive minerals and metals to actually build, so therefore it's more feasible that this battery technology, if successful, could be implemented on a mass scale in electric vehicles and actually get commercialized at a reasonable price point. That is really exciting, and I'm always on the lookout for new battery tech, although I feel like usually it's a lot more hype than actually execution. But for some reason, I think this one is different just because of the caliber of the scientists that made the discovery. So I'm going to link to this. For those who are into electric vehicles, always something to watch, because if Tesla could boost its range 10x with a new technology, that would make the case for electric vehicles and therefore their battery business even more compelling. Startup of the episode. All right, this is going to be probably my favorite part of the whole podcast. I love startups, so I wanted to highlight a startup that I think is disrupting an industry that has huge potential, that is a business model that I think is really going to be successful, and just give some love to a startup that I think is doing something cool. So today, that startup is StockX. I have a very personal, I have a lot of personal affection for StockX because they do something that really hits home. They are a sneaker marketplace, a stock market for sneakers, and eventually all things. This is an incredible concept. Their execution is phenomenal. They built a web platform that is much like a stock market kind of exchange. It has a bid and ask for sneakers. They're solving so many problems in the sneaker industry. I can't even tell you. I used to, in high school, resell sneakers, wait in line, put them on eBay, collect the profits, resell them on forums. There was always this question of, are you going to get paid? Is it through PayPal? Do you have to wait for the money? Are the shoes you're getting legit? There's just a massive headache with the sneaker industry. And even so, there's so much pent-up demand for the sneaker market that they're estimating in this Bloomberg article I will link to that says the sneaker reselling market alone is between $200 and $500 million annually. And this is before StockX, who I think is going to grow the market significantly. So even with such a fragmented and just kind of archaic model of eBay, phone calls, PayPal, everybody getting screwed at one point or another. I've gotten screwed on so many sneakers. That's why I stopped trading sneakers, because I could never find a way to buy something that was legitimate or make sure I got paid in a legitimate way. It was just too complicated and I got screwed too many times, and then it wasn't worth it. StockX has solved all of these problems. So first of all, every transaction goes through them. So to list a sneaker on their website and get it bought, you have to send it to StockX, who will verify the authenticity and quality of that sneaker before you get your money and before the person actually pays for it who gets the sneaker. So by them acting as an intermediary, and they do take a 10% cut for this, which I think is totally fair, they're ensuring the authenticity of the sneaker. That is the biggest headache. A, the authenticity, B, that you will get paid. And they nailed it. And I've read feedback, people are tweeting about that. People are obsessed with StockX. These guys are tweeting constantly, check out how much money I made. This is solving a real problem for sneakerheads around the world. I bet you ask anyone who was used to selling sneakers on eBay and who is now on StockX, they will tell you it is a world of difference. They are totally disrupted the market. And so they actually raised a bunch of money too. I think about $6 million from a bunch of celebrity investors, including Mark Wahlberg. And they have a team of 21 people. They're based in Detroit. The startup, they release new features almost very frequently. In fact, the new coolest one that I saw they just came out with is you can have a portfolio view of your sneakers. So you can actually get this digitalized portfolio of the sneakers you bought or are selling on StockX, and it will tell you the market price of those sneakers, where your value is allocated. Do you have are you overweight on Jordans? Are you underweight on Adizas? Could you be investing more in Yeezys now that they're down in price? Incredible. As someone who's into finance and someone who's into sneakers, this is my favorite startup that is out right now, that is blowing up. I think the investors who invested in the last round are going to hit a home run. StockX has incredibly executed so far from getting this off the ground. They went viral with this YouTube video that is hilarious, where it's Wale drinking a daiquiri, talking about all the problems that StockX has solved. Anyway, it went viral. I'm going to link to that too. It's a hilarious ad for the company. You should totally watch it. Even if you're not into sneakers, I think you should look at StockX, just because it shows the future of the digital economy and how we can use companies and platforms like what StockX is building, not just for sneakers, but for incredible amounts of other items as well. And I think StockX is probably going to expand far beyond sneakers. In fact, they've stated in their mission, I think, that they want to be the stock market of things. And if they can actually pull that off, this is a multi-billion-dollar company. So really excited by StockX. Love to see innovation on every level. The fact that they're doing this in a city like Detroit, reviving it, bringing jobs, bringing exciting technology, making it easier than ever to look fresh with dope sneakers, A+, incredible business. Check out StockX, shoot them a tweet, show them some love. If you need a new pair of kicks, you know where to get them. First podcast. I hope you guys liked it. We'll come back next week with another podcast, tech news, startup of the week, maybe a new feature I haven't thought of yet. We'll see. Anyway, been a real pleasure. Thanks for listening. Tune in next week.